So, you know what I found fascinating as you were talking, it was something you mentioned right at the beginning, that this is not a physical product.
Yeah.
And I think when I think about it, the nebulous nature of any financial product makes it interesting from a technology play standpoint.
Yeah.
So here's a question. I think my first question was going to be about regulated industries, but I'm not going to do that anymore. I'm going to jump into something else. You're working, so as part of your Mass Challenge win, congratulations both of you. You worked with one of the largest insurance companies out there. What is that relationship like? Because you're essentially innovating and disrupting their life.
Yeah. I like to think of it as enhancing, but I'm sure that it feels like disrupting, having that on the inside, right? Yes, so we worked with a very, very large disability and life provider here in Massachusetts. They were going to serve as a distribution outlet for us. And I think our corporate background was actually really, really helpful in working with them, right? Just in the sense of, we expected the pace to be slow but deliberate. We expected that we would need to find a sponsor at a senior level. We established a process that we agreed upon with them up front, where we talked to different areas of the organization to see where the best fit was, found a sponsor, laid out a plan, implemented to the plan, and that actually worked really, really well. Yeah. What I've heard from them, there are pros and cons to coming from corporate and going into the entrepreneurship world. One advantage, I think, is that if you're in a space like InsurTech or FinTech more broadly, you do have an understanding for how these companies work, and the fact that every process is sort of a lot of things connected. You can't cut something out and replace it with something else and have it just work, right? Like, it just doesn't work. And so sometimes, obviously, our friends who come from a tech or a pure startup background have other advantages in understanding the technology and knowing how to move quickly and being well connected, but sometimes they miss that point. And so I think that's why the Mass Challenge FinTech program was particularly valuable for us and worked really well for us. Also, they were a great partner. So.
Fantastic. So if you go from there to really now talking about, you spoke a little bit about the technology coming in and playing, right? So it's talking about what it took you folks from taking this idea that you had and went around and said, you were not left behind in any fields in the Midwest. And you came back. What did it take you folks to then go from there to actually have this physical product out there?
Gosh, a whole lot. I think I'm going to answer this partially and then see what Jay has to say.
I think you're doing a great job.
No, I'm delegating back to you, Jay. No, that's a really good question. So we kind of have told this as a joke, but it's actually not really a joke. When we started the Mass Challenge program, I guess it was eight months ago now or 9 months ago, we were literally 2 people and some slides. A very, very nice PowerPoint, mind you. That we did learn in corporate, right? Branding is everything. This beautiful, actually I'm not on the cover page, but it was gorgeous. That being said, there's a world of difference between 2 people and an idea and actually getting somewhere, right? So what did we do? We raised a bunch of money, first of all. One of the things that's tough about InsurTech and about some segments of FinTech is that there's this lean startup mentality out there, like, oh, well, why don't I give you $100,000 and you make some prototypes and sell 10 off a cart at the mall, and that'll tell us that there's a market there. And we had conversations that basically were just like that, and I was like, right, so I will be arrested as the licensed agent on staff if we do that. There's like this regulatory process and this licensing process, and then there's this coverage language that if it's wrong, we're going to get sued, and that's going to be really ugly too. Thank you. Better? Yeah. All right. So raising money was a challenge initially. Then we found some traction with largely with retired insurance executives. We also got a bit of a tailwind from Plug and Play out on the West Coast. They're West Coast incubator with a fund attached to them. Their 30 corporate partners voted us first in our batch, and they made a quick investment as well. So that was one piece of it. But then when you actually talk about building, there were sort of a bunch of different chunks, right? There was the product, which was around choosing the coverages and doing the pricing work, which I did given my background, right? There's a piece around the tech build out, so both a beautiful front end that looks like a modern customer experience and not necessarily like a lot of what you may have seen in the insurance industry, and then a back end, which is a whole bunch of insurance systems. Like you need things like a policy administration system, right? Which is the lifeblood of an insurance company. It's a system of record. It holds all the information about what policies you have. It's not a whole lot of fun to talk about with investors, right? But we were excited because we went out to buy all this back-end software, and we're used to multi-million-dollar software, some of which has been home built by large insurance companies over 20 years, and it's slow and not flexible. And now we're kind of like, wow, for like orders of magnitude cheaper, you can buy something that's totally in the cloud, it's really configurable, you don't even need a program to make it work. So stitching that back end together has actually been really exciting because the power of what's modern has been great. So there's that piece. There's a piece around licensing. I'm a licensed agent. We had to license Surround as an agency in several states. I have like a PhD in filling out paperwork at this point. Didn't know that was going to come, but it sure did. And then we're in the process of finishing up our negotiation on a reinsurance deal, which is the last step in the process to getting to market. But reinsurers are obviously multi-billion-dollar corporations. You have to get far enough along that they believe it's worth working with you. Jay, I just talked a whole lot and was like, now let me call on you.
I see it as EK and AK, before Kate and after Kate. So Kate described after Kate.
Right.
Before Kate, I think there are kind of three things that come to mind. One is, it's belief, willpower, and vision. Like,
right.
I'll go up a little bit from from what we needed to do to get here to when it's just yourself or when it's just the two of you. It really is about, you have to have in your mind's eye a very clear picture of where you're trying to go. I remember asking Kate on the drive to cornfields, can you see it? Like, can you actually see what I see, even though we hadn't built anything? And
I was like, Jay, I'm driving through the cornfields on a hot summer day between St. Louis and Springfield, Illinois. Trust me, I can see it.
So that's like, you have to live in this, a year, 2 years, 3 years out, thinking about what is it you're trying to deliver and what feeling do you want the customer to have when you've created it. So that's on the vision side. On the belief and willpower, that just gets challenged every day. Every single conversation, you have to be willing to take the no's. You have to be willing to get your story out. You have to have that belief and to know that you're on the right track. There are markers. There are things that you don't even realize are markers that pop up later. And so I'd say that belief and willpower are a really important piece of this. And it's hard to do by yourself. I did it for 6 months after leaving the job. I was on my own, and I was looking for that co-founder, searching for a co-founder. And so, you're constantly being tested. Am I on the right path? Is this really real? And so when you finally have a co-founder, some people, believe that you should have 2 co-founders, 3 co-founders. You're reinforcing to each other. You have your bad days. You have your moments of doubt. And so you're there reinforcing for each other. There are only a few instances where we're both like, oh, this is not going to work. This isn't going to work. You balance each other, right? It's really about, I will have my bad days, right? And Kate will say, it's going to be amazing, Jay. And it's the same thing. Like, Kate's like, oh, I'm not sure. It's like, it's going to be amazing. Yeah. So you have to find that right co-founder, partner, or multiple partners, right? To be able to get to that place where you can make it happen. You can will this into being.
This is the most humbling thing I've ever done in my professional life. It really is. It's humiliating at times, right? Because you're doing things that you've never done before at top speed, and you're like begging people you used to work with to help you. Like, remember that favor I did for you back in '99? Right. And yet you kind of have to pick yourself up every day. I mean, it's a crucible, right? Like, there are people who sort of flame out, and then there are people who have come out of it stronger, and I hope that for both of us. Right?
I think it's so interesting because you spoke about 2 aspects to this. One is the hardcore building of a product, building of a company, and then the softer part that many of us really forget because we then see a successful company and we don't know the heartbreak and tears that went behind it to build that out. So I think our audience come from 2 different, possibly broadly speaking, 2 different themes. There are folks I know who come from the insurance world here. And many of you are also entrepreneurs and look at the younger technology, fintech, and tech space. So I have 2 questions before we go into our ideation conversation. One is leaning more towards for the folks who are interested from an insurance standpoint, the product standpoint. Yeah. What are your short and midterm from that standpoint, where you are today? If you were to look into the next year and maybe just the 2-year time frame, how do you think your company and your product suite will evolve?
Yeah, good question. So insurance, because it's regulated state by state, is a little bit of a dynamic that's maybe different from fintech. So there are kind of a couple of different ways you can think about it. There's the axis of geographic expansion, and then there's the axis of product expansion. And so what we're building is a starter pack. It's a minimally viable product, right? But it's aimed at a multi-billion-dollar market, right? So a piece of what we're going to be doing is launching in Massachusetts, our home market, and then blowing this out to states that have large urban areas fairly quickly, because you need to do that to get to scale, especially when you've got investor money, right? There's both that and getting ahead of other folks who might come in and copy if you're successful, and then there's the scale you need to kind of make the financial models work, right? So there's geography. And then in terms of product, this initial product that is just the starter pack, it's like a simple base pack. We've got a number of large insurance companies we're working with that have simpler products. There's among their kind of simpler, more products that are more appropriate for this kind of young urban professional. We're talking to them about, accident and health products, simple disability products. Imagine travel products and other kinds of products like that working within our ecosystem. So we don't have to design all of the products. We can also redistribute other carriers' products as well, and that's a piece of what we've been working on. That's where coming out of the insurance industry is helpful for those relationships.
That's fantastic. So I lied, I have two more questions, not one more. But the question before I go to purely the entrepreneur side is for the technologists in the room here.
Yeah.
So you mentioned in passing that it was you picked and chose what products you bring into your stack at the back end.
Yeah.
So when we talk about insurtech or fintech, right?
Yeah.
The whole idea is you're leveraging digital technology, but insurance is a state-owned industry. Right?
Yeah.
So I think that's my question for you. What is that combination, and how did you leverage the newer technologies?
Yeah.
And what role did they play in maybe accelerating your progress in what you're doing?
Yeah. I want to answer part of this and then flip it back to you, Jay, too. I know, all the hard ones, Jay. So there's front-end technology and there's back-end technology, right? The front end, it's super easy to pick up a whole bunch of stuff that's really modern, right? We have a product designer on staff. There's kind of modern, best-in-class design for what a UI should look like, how the usability should work, what products, what kind of suite of tools you want to use to kind of both plumb that and get analytics off of it. So that was obviously hands down modern stuff. Like this is just e-commerce, right? There's nothing special about insurance compared to anything else from that perspective. That was easy. What was harder was the back end, right? So I've worked for 3 insurance carriers. At many of them, a lot of the back end systems were custom built over years and years and years. And one carrier I worked at, I talked about the policy admin system a moment ago. One carrier I worked at, we pulled out the custom built policy admin system, put a new one in while I was there. It took 5 years and $500 million. Right, so that's out of scope for an insurance company like us. So we went exploring a bit, and it turns out that you can actually buy really modern software that might have been intended not for, the Liberty Mutuals of the world, not the John Hancocks of the world, but there are a lot of smaller insurance companies, whether they're mutuals or in the insurtech space or managing general agents like us that are sort of kind of a cross between, I'm going to explain it in a way that makes the insurance people cringe, but kind of a cross between a small carrier and an agency. And if you look far enough, some of that's actually really well done, right? There's some really talented people in the software space who are serving those specific needs. And so we were able to buy a bunch of software like that, and then combine it with, customer service software that's intended maybe not for insurance, but for startups, that really scaled really well and connected. I don't know, Jay, do you want to share some?
Could you ask the question a little? Is it how will technology allow us to accelerate 2 years from now, or can you
you can answer that one too.
Yeah.
But my question was more, how did technology allow you to accelerate your?
I mean, in addition to everything Kate said about seeing what it's like to be in the belly of the beast and how technology decisions are made in $5 million increments, right? And we're talking about $50,000 increments,
right?
In the way we think about that spend. But So I'll interpret it, put a little different spin on the technology piece. The question for me is, there is a consumer here that just has a different set of expectations and a side of insurance. I mean, there are some simple ones out there that we can use, like PillPack is simplifying the prescription medication process for consumers so they don't have to manage it themselves. Or Stitch Fix is using AI and data science to deliver personalized outfits at scale. So you see these examples within other industries of ways you can reorient from a very product-driven mindset to a much more customer-centric mindset. What the customer is going through, what they expect. And so when I look at, for us, the beacons for us are not within the industry. The beacons for us are companies that are applying technology in ways that consumers have just come to expect. It just works that way.
Yeah.
So when we think about technology, it's really about setting the foundation. We could have started anywhere with this innovation, but the concept is we're going to a white space of consumers that just is really underserved and doesn't have access. And it gives us some time to innovate and think about our starting point and to modify our product approach. But the technology that we'll be using, at our foundation, we're a data science company.
Right.
We need to set up the architecture, the data architecture, the plumbing in ways that a traditional insurer does not think about. Kate alluded to it. There are little Easter eggs in our approach that give us non-traditional sources of data about what that consumer is doing, and delivering on because of our expertise as insurance people, we can deliver on a new experience to that consumer. Kate talked about, like, why do we make them cancel and shop? That doesn't make any sense. Just upgrade them. Just tell them, congratulations, you got a condo.
Yeah.
Give us the one piece of data that we need in order for us to unlock the upgrade pack for condo.
Right.
Yeah.
Congratulations, you bought a car. Take a picture of the VIN and we'll unlock new driving upgrade pack for you based on the car that you bought.
Yep.
So those are things that we can look to outside the industry and borrow elements from and bring them in using data science, algorithmic learn. I mean, there's all kinds of like buzzwords, and we won't go into those details, but there's many startups out there that have applied new forms of technology and design, and we can do that here for the insurance space. That's how we think about it.
I'm just fast. I want to hear you talk about this for the whole evening now, because I think. Go ahead.
I'm sorry. The third-party data. You didn't mention the third-party data.
Yeah.
Isn't that a part of it?
It is. It has second and third party. I mean, I'm splitting hairs here. Third party is like, you didn't give us permission, but we learned about it. Second party is you gave us permission because of a benefit that we've given you, and you've given us permission to learn a little bit more about you. I mean, there are frameworks out there where, right, the consumer will share with you. We've learned this. There's a product that in auto has become the only way to sell insurance, right? It's telematics, which is, if you permit me to see your driving behavior, I will give you a better price.
Right.
And that's, I don't know, 60-70% of all new business now is sold that way, where we can track your driving. And what you find is the best drivers will say, track me, because I want to get the better price, and I believe in myself. I'm basically putting a bet on myself, and I'm showing you I'm a better than average driver. How we got here and what we're doing is, it doesn't end with just, and it doesn't start and stop with just auto. At the end of the day, this is a consumer that has behaviors. And you're seeing every single company try to solve this in their own silo. Auto providers doing telematics, life insurance companies sharing Apple Watch data, right? Health insurers that are saying, qualify for this, but they're still thinking about it in a very siloed industry approach. And when we think about it, it's like, it's the same consumer at the end of the day. So if we can give them, we can understand them, and we can deliver for them not just a lower price, maybe it's we have less gotchas. You share with us, and it's less exclusions. Maybe we give you more coverage. So it doesn't have to be just about price. It could be that we actually don't say no in more instances because you've shared with us. It is the way this generation thinks. It's not for every generation. It's not for everybody. But as we think about it, there's a human human telematics that is sharing this data, and then we can design the coverages around how they're actually living and working and moving in the world.
Yeah, if Stitch Fix can take a little bit of data about your preferences and colors and outfits, and a few pieces of data about what you've actually purchased from them, right? and show you brand new outfits and styles you've never seen before that you're very likely to buy, can't we describe how you behave and how you're exposed to risk, and therefore what insurance products can both protect you and you're likely to buy? We would say a resounding yes.
So we're going to have a part two to just this piece of the conversation because there's so much to unpack there.
Yeah.
But one last question for the audience here, and then we'll do a breakout. You kind of very quickly went through the challenges of funding.
Yeah.
And because you make the point, it's not just a regulated industry,
Yeah.
it's a multifaceted
Mhm.
set of regulations that
Yeah.
affect you, and therefore funding is a challenge. Maybe in a couple of minutes, tell us why that was a challenge and how you folks approached it.
Yeah. I split this one with my co-founder again. This is
We should
partnership
have
at
had a
its
chair for
best.
you up here, Jay.
Jay, honorary chair. Yeah, funding. So there is this lean startup mentality that I've talked about, which makes a lot of sense, but was born of a particular time and place for a particular kind of technology product, which doesn't lend itself well to capital-intensive industries. Biotech has kind of solved that, right? But fintech and insurtech kind of have not, right? And so that is a challenge. So you go and you see generalist investors, and they sort of say, great, so show us your traction. And you're kind of like, great, so we've got all these interviews, and they're great, but like, and they're like, yeah, so how many policies have you sold? And you're sort of like, so there's this license thing, right? Not so helpful. That's a tough conversation. Not to say it can't happen, but it's tough. Alternately, there are like 4 insurtech specialist investors who are very knowledgeable. They tend to be corporate venture capital funds. Because it's insurance company money, they want to invest later, right? They need to keep the risk profile lower, so a seed stage company is not really where they're going to play, right? We know some of them very well, right? They're great people, but they're not going to be helpful at this stage. So then you sort of say, okay, well, you got 2 options. You can kind of go after the seed stage investors who don't know insurance and try to explain to them both how this is different from Lemonade and why this is really great in a big market. And I'll tell you things, I'll give you one specific example without naming any names whatsoever. We got so far down the path to be in like a 5th due diligence meeting with a fund. And the entire partner set had come together for a 2-hour diligence meeting. And one of the partners opened with the question, so let me get this straight. If you have an auto insurance policy and I have an auto insurance policy and you hit me and it's your fault, who pays? So we sort of explained that. But what if I had like a Lamborghini or something? What if the accident was actually not in Massachusetts? Right. So when you've got a product that's complex enough that you're explaining to people how it works at a basic level in a 5th due diligence meeting, that is not an investor that's going to write $1 million check. It's just not, right? And the reality is that very few people actually understand insurance. So one thing we did pretty quickly then was reorient and sort of say, okay, so who knows about insurance and is excited about insurance innovation and has money and is an accredited investor? And it turns out that I'm going to let Jay tell the story a little bit more about the first checks, but it turns out that retired insurance executives are a great source for maybe smaller checks than a fund might write, but in cumulative, nearly $1 million at this point, right? And many of them we were able to talk to and sort of say, this is what we're doing, and they were like, great, here's a check, right? So different process as well. So I think there is something to be said for customizing your approach to your market and who you can talk to and really convince.
And also industry expert.
Yeah,
from your
yeah.
partners, yeah.
Which is amazing from an investor / advisor, right?
Right.
Really helpful as well. Jay, you raised money actually. You raised the first tranche of money before I even came on board. So
Yeah. I mean, it's hard. I mean, everybody wants to have product and revenue and have a lot of profit, and then they'll write you a check. But if that's the case, then you don't need them to properly write the check. So it is. I mean, the best advice is just keep modifying your approach, figuring out what market segments, to Kate's point, are most understand the problem that you're trying to solve. So we found those retired insurance executives, they had all thought about it during their jobs. They knew they couldn't do it. So they saw us as a vessel, a vehicle, to go solve the problem that they couldn't solve when they were at these insurance companies. So I'd say just the same way that you're finding customers for your products, you've got to find the right slice in the market of how do you find, target, and win them. It's the same way for investors. There are certain segments that very quickly you can start to say they're, as much as you would love first round capital to invest, they're not gonna be investing. And you could go out and find a dozen or 2 dozen VCs that look like first round capital, and you're probably gonna go 0 for 12, 0 for 24. So put enough feelers out in the marketplace to understand where is your message resonating, and then go after that in those early days.
Take the nose and keep going. Sorry, one more thing here.
Yeah.
So if you need 10 people to write $100,000 checks to get yourself to market, you're gonna have 100 conversations easily, at least. If you have 100 conversations and you get 10 checks, you're doing really well, right? The reality is that there are just so many no's, and you have to just kind of take the no's and keep going. And then the second thing I would say is that you have to continue to build. It can be easy to let fundraising take over your entire life, right? It can be an absolute full-time job. And in some ways it's really exciting, right? So like, oh, we're getting a little bit of traction, let's go. But the reality is that the further along you get in the product build, the more likely it is that those investors are gonna come in. So kind of finding the right balance is a real challenge. Yeah.
I think still, again, so much more to unpack on that, but well, we have to end somewhere today. So here's what my takeaway is from this entirety of the conversation. Non-traditional set of investors, non-traditional set of consumers, and non-traditional set of products. So you are truly disruptors in the industry.
You just made us sound really cool. I like you.
Really.
Do you do marketing?
Happy to do that on the side. But